Okie dokie. Okie dokie, everyone. First of all, can I say a very good morning, or a very good afternoon, or a very good evening, depending where you are around the world. And thank you for joining me on tonight's webinar on how I came to understand a trader's mind. Now, this is obviously a series of webinars I'm running called How I Got To. But this one in particular is How I Got to Understand the Mind of a Trader. That's the correct title, my mistake. But obviously it's written by myself, James Trescothick. I'm the Chief Trading Educator here at Stratton Markets. Now, before we get on to a bit of an introduction on myself and tonight's agenda, obviously we're talking about CFD and online trading. And with every type of investments, CFD and online trading does indeed carry a great deal of risk. Denny, this sounds like it. Is that a little better? Can everybody hear me okay? Is that a bit better? Okay, let me know if it gets better. Okay, hopefully that's a bit better. Okay. Anyway, like I say, like with every type of investment, okay, online trading and CFD trading does indeed carry a great deal of risk. So I do suggest every single one of you do your own research and due diligence and know the risks involved before entering any trade. Now, with that out of the way, now let me do a bit of an introduction on myself. Bit of a repeat. Okay. One sec, let's see if we can sort the echo out. Thank you for bringing this to my attention, because obviously I'm in the studio, which is a little bit of an echoing. Hopefully that makes it a little bit better. Now, like I say, let's do a bit of a formal introduction on myself. Like I said, my name is James Trescothick, and I'm the Chief Trading Educator here at Stratton Markets. I have over 20 years of experience in the financial service industry. And as you can see, that hairy, good-looking chap is myself. I actually started off in the industry at the ripe age of 18 years old. I'm now 40, as you can tell by my picture. Some people say maybe even 50, but I am only 40. I started off in the industry as a mortgage broker, where I specialized in commercial mortgages and obviously buy-to-let mortgages. I then went into pensions and alternative investments before I entered the online trading arena, and I've been in this industry now for around about coming up to 12 to 13 years. I've won an actual floor at the Philippine Stock Exchange. I've traded myself for a prop company in Dubai Gold and Commodity Exchange, then went into portfolio management before moving into obviously the educational side of things. I am indeed a published writer, and I've been published in leading industry publications, including the likes of the Financial Times Advisor, Market Watch, The Street, and several newspapers, including like the Echo and the Metro, etc., and Traders Magazine in the UK. Okay, I'm also an avid market commentator. One thing I am extremely passionate about is indeed the markets. I'm an avid commentator on that, and I'm a well-known public speaker. And I've spoke in a number of industry events around the world. And some people say, occasionally, I like the sound of my own voice. Now, though I do have very grounded knowledge and experience, a lot of this I will share with you tonight, and with other webinars I will do. I do not, for 1 second, ever call myself an expert, because personally, I believe there is no such thing as an expert in this market, okay? However, I've got a good standing education and knowledge and experience, which I hope I will share with you, and you will take away with you, and you will build your own wisdom and knowledge of this industry, okay? Now, tonight's agenda, like I say, today is called How I Got to Understand a Mind of a Trader. So, the topics we will cover tonight will include a difference between a gambler and a trader, okay, because that's something we need to cover. The 5 stages a want-to-be trader goes through, And I will ask you a question now. I want you to ask that question for yourself. What stage do you believe you are at? Then I will ask, and we'll start discussing entering a mind of a trader, followed by up-and-coming educational events for the rest of September. Then, of course, we'll do the usual question and answer session. So any questions you may have, please leave it to the end. And I will, of course, if I know the answer, of course, happily answer them. Now, let's put myself on screen so you can see my ugly mug. Now, gambling versus trading. Now, this is a topic and a question which is often spoke about when you're discussing or talking about CFD and online trading. Now, really, this is a question you need to really ask yourself, okay? Because if you're involved in market investments, like I say, especially this arena, CFD and online trading, you really must ask yourself this question, and you need to be honest with yourself. Are you a gambler or are you a trader? Now, to understand or be able to answer this question, you really need to understand the question and really understand the difference between the two. And like I said, you need to be open with yourself. You need to be open about what category you fall under. Now, a gambler, their overall motive in trading is the adrenaline rush, the thrill of being in the game, the excitement. Their freestyle, their trading, and basically their trading is all freestyle, and they make momentarily decisions for the sake of making them. Purely they're driving by the excitement. And let's face it, this market is exciting. You've got your charts, you've got your rates, you've got your news flashing at you. So it is extremely exciting. So a gambler is motivated by this or driven by this, and they fall prey to this. Now, the common practices a gambler goes through includes the like of trading without the basis of solid information. You know, they're not basing their trading decisions on anything or any really real foundation. Okay, and this is going to leave them vulnerable to like random nature of price movements, because this market, like I say, can be extremely random and fast moving. So when they go into the market without a basis of any solid, grounded decision making, you know, they really are victims to their own demise, to their own decision making. They tend to use like 5-minute charts to sort of gauge support and resistance. Okay, so again, fast moving, exciting moving charts. They react to the latest economic releases without understanding prior market expectations or current price flow or countervailing information on that asset they are trading. So they react when they see something and not understanding what that actual indicator or that event is actually telling them. Okay, again, they're getting involved in the excitement, something which I call market noise. Okay, the trader is totally different. For a trader, the act of trading is basically a craft. It's a skill. They take their time to learn, and they use informed knowledge to base their trading decisions. They work hard and they practice. Their trades are not random, and each trade is thought through. And more importantly, they follow a strict action plan that consists of a prudent money management structure. And those of you who might have noticed, I changed my voice a little bit when I was describing a gambler and describing a trader. When I was talking about a gambler, I was very animated. I was very loud and very excitable because I was describing the emotions a gambler goes through. But like I say, a trader's not. A trader's different. They're patient. They're calm. They're collective. Now, the trader's common practices includes the like of when they see an economic event or a calendar event, they're reactive on the basis. They act because they've done their research upon what that event means or what the market is talking about. They enter and exit the market in a very very disciplined, controlled manner. They use longer time frames on their charts to engage potential support and resistance. I say longer time frames. I'm saying an hour, 4 hour, daily, weekly. They calculate their indicators very precisely, such as the Fibonacci retracement levels. And they make decisions only when multiple time frames confirm their analysis. Again, they're not leaving themselves to trading on a whim on a short-term chart, like a 5-minute chart. And more importantly, they have a full understanding of what is occurring in the markets on a daily basis. They understand the economic events. They understand what the market's talking about. They understand the political story driving the market, creating sentiment. They understand market sentiment. Now, like I say, this is a question you really deeply need to ask yourself and be honest with yourself. Which one are you? Because the biggest difference between a gambler and a trader is simply hard work. Success, like everything in life, requires hard work and effort. However, working hard doesn't, of course, guarantee winning. But there's a very old saying, and I like this saying, that failing to plan is basically planning to fail. And let's face it, you know, we wouldn't have casinos like in Las Vegas making billions if gambling was a science or most people could win on gambling. Because gambling, at the end of the day, is more to do with blind luck. You know, like the guy who invented roulette, you know, a very popular gambling tool. He invented it, and even he couldn't break it or calculate it or solve a system on it because it was based on blind luck. And unfortunately, the chap ended up killing himself. But anyway, I'm digressing. That's a little story for you. So like I say, gambling is more based on blind luck. Trading is a skill, and for a small portion of us out there, actually becomes like a profession or job. And like I say, more importantly, the underlying factors, trading is about discipline and understanding the importance of information and using and sticking with a plan. Now, there are 5 stages a lot of wannabe traders go through. And again, this is a question. I'm going to ask you a question at the end of this. And I want you to ask yourself, be honest with yourself, ask this question to yourself. Same as I asked you to see what difference you are. You're a gambler or a trader. This is another question I'm going to ask you at the end of this when I go through the 5 stages. And these are the 5 stages. Number 1 is called the unconscious incompetence stage. The second stage is called the conscious incompetence. The third stage, which very few want-to-be traders actually get to, is called the awakening moment. And because very few traders get to this stage, they don't get to the stage 4, which is the conscious competence, or more importantly, stage 5, which is the unconscious competence. That's all very good, James, but what do these stages mean? I will share this with you. Conscious incompetence. Well, messed up my animations there. Let's try again. Unconscious incompetence. This is the stage when somebody who has an interest in trading just simply gives it a go, jumps into the market without knowing anything about what they're doing. Obviously, there's 2 types of scenarios happen like this. First of all, they jump in not knowing what they're doing and lose the lot, get blown out. The second scenario is purely by blind luck. They actually make a winning. And that's more dangerous at this stage, because if you win a trade, really simply not knowing why or how you won it, you get this slight touch of arrogancy and self-belief that it's easy. And of course, what happens in the end, not knowing anything, is of course they end up blowing out. Some people at this stage leave the market and the industry altogether. Others move to stage 2, which is conscious incompetence. This stage, the wannabe trader realizes they might need to start understanding and learning things. So they started doing a little bit of research, understanding a little bit about technicals, understanding a little bit about fundamentals. They then start investing in like books and things like this, start reading a little bit about it. And then they maybe spend some money on expensive expert advisors or go to sort of like seminars looking for the secret, you know, the hidden secret, which they think they can help you. But they still lose. They still lose. And what ends up happening is they end up then blowing out their accounts still based on information. And at this stage, they blame the markets, they blame the EAs, they blame the broker, they blame the trader. They don't take responsibility for their actions. And most traders end up staying at this stage. They don't get past this stage. Very few gets to the third stage, which is called the awakening moment. This is when you realize trading isn't simply about EAs, technical analysis, this and this. Trading is about a plan. Trading is about being disciplined. Trading is a craft. And this awakening moment leads them onto the conscious competence. At this point, they have a plan. They're still scared. They're still risky. They're still nervous, but they do not stray from this plan. They're conscious they need to keep to this plan. And if they carry on with this plan at the conscious competence, they then can get to the unconscious competence where they are so at ease, the plan is a second nature to them, and everything just free flows. Very few people get to stage 3, 4, and 5, and most traders get stuck at the conscious incompetent stage. Now here comes my question, and I want you again, be honest with yourself. Ask yourself this question. Do you stick to a plan when you're trading? Do you get emotional over your trading? Do you flood your charts with so many different indicators that it looks like a Jackson Pollock picture? You know, where you can't even see really. It's just blinded with the different indicators and colors and this. Do you take responsibility for your losing trades? And do you have a trader's diary? Now, if you answer no to any one of those questions, or maybe even all those questions, I'm sorry to say you are stuck in the conscious incompetent stage. Easy for me to say. And you really need, if you're still at this stage, you need to have that realization. You need to try and get to the awakening moment. Now let's delve a little bit into those who get to the awakening moment, those who get to, you know, the unconscious, the conscious and conscious competence and unconscious competence. What a mouthful. I know. I didn't make it up, just so you know. Some of those traders who do get to these stages, let's have a little chat about what's in their mind, what makes them different. First of all, it's detachment. Now, getting out of a trade either in a winning position or a losing position doesn't actually matter because you're detached from it. There's no emotion to it. You know, besides being able to be detached from your trade, you know, and being detached from your trade allows the trader to be basically more focused on getting their trading strategy right and their process right. Detachment also allows a sense of calm. And like I say, I call it market noise. If you have that sense of calm, you do not get lost in all that market noise, all these distractions, all these things flashing at you. You've got that sense of calm so you can focus. The other thing they need is discipline. Discipline. Now, trading takes patience, energy, a lot of energy, look how energetic I am, and motivation, which all require discipline. You need discipline to follow the process and to keep to your trading system, not to stray away from it, to focus on it and keep it. You need discipline as well to know when a loss is a loss not add to it, not make the loss bigger, not to hold on for too long, not let the loss get bigger and bigger. It's that those who joined me last week, they know I spoke about the battle between fear and hope. This is what I'm talking about. You need discipline to know when a loss is a loss. Switch hope and fear around. And you need to know not to be able to make excuses, blame anything else. Now, the other thing they need to say, or what's getting into a trader's mind to make it work, is trade size. And this comes down to money management. Okay, because money management and a trading strategy basically goes hand in hand. It works as a partnership together. It's the perfect unison of two things coming together. And professional traders tend to look at smaller contracts or smaller lots. They do not take big risks with big trades, because if you put all your money in, like again, this goes back to the gambler and trader, put all your money on black or all your money on red to try and double your profits. Again, that's not a stylized plan, that's gambling. So professional traders tend to trade smaller contracts and lots and do not take big risks. Now, Bernard Oppit, I think that's how you say his name correctly, if I'm wrong, he once said, and he's the CEO or the owner of Consensus Management. It's quite a big firm, French chap, very smart, very successful hedge fund manager. He says you do not need to risk a lot to profit a lot. So again, trade size is something which a proper professional trader focuses on and keeps his eye on the ball. And funny enough, the last thing, and bear in mind, we are talking about high risk market, is risk aversion. Because trading involves fear and anxiety. And as I said in my last week's webinar, losing is part of the game. So you need to prepare yourself for losing that trade, or losing a trade, or losing many trades. Professional traders are aware of this. So they tend to be more cautious, and don't put all their money in the market. Again, like I say, going back to my analogy in the last slide, not putting all their money on red or their money on black. They tend to look at trends and try their best to identify breakouts and reversals. They also limit their risk, again, back to trade size, by trading small. And they only look to try and add winning positions, not losing positions. Again, being scared of when they're losing, it's going to get worse. So they don't add fuel to the fire. They're more controlled with it. And finally, they're at ease when they're stepping out of the market, when they're feeling uneasy. They're not scared to take a step away. Because let's be open. How many experiences have we gone in that we are scared to close a losing trade, or we're scared not to trade on a particular day because we're scared of missing out? A proper trader is at ease for saying, I'm okay with losing this trade and stepping away, or I am okay for not trading today. I'm having a bad day. Let me close the laptop, or close my phone or tablet or whatever, or walk away for the day so I can clear my mind. Not revenge trade. They're at ease not to be in the market. So that's what really the things you need to think about or delve into inside of a mind of a trader. Now, up and coming educational events for the rest of September. 11th of September, I've got how I came to terms with my losing trades. 18th of September is how I was spell it. It's supposed to be came, not cam. Whoops. How I came to understand channels and trend lines. That's a good one. That's an interesting one. I like that one because I'm going to go a little bit more technical. I've done a lot of psychology and risk management. So on the 18th, I'm going to go back to a little bit of technical analysis, trend lines, and support and resistance. So that'd be a good one. And then on the 25th, to end the month out, is how I started to pay attention to stocks. I've said this already, just giving you a heads up. It's nearly finished now. The new video series I'm working on, Your Market Fix. It's about to be released very, very soon. So keep an eye out for that. And like I say, if you wish to speak to me or ask me questions after this webinar or anything like that, or you have maybe some ideas of topics you would like me to cover, please feel free to email me at james@strattonmarkets.com, or indeed follow me on my Twitter account and direct message me. And like I said, I'm always open to hear from you guys, let you know what you think, feedback. If there's any topics or areas you would really like me to focus on or cover, for example, I had somebody, which I will do, is asked me to do something on WTI oil trading, and I will do a case study on oil. So if you've got any ideas or things like that you want me to cover, maybe gold or something like that, or Elliott waves, or oscillators, stochastics, please feel free to contact me and let me know if there's any particular areas. Because don't forget, at the end of the day, these are little educational webinars. I write them and present them for you guys, for you people. Okay. Now, before we go to the questions and answer session, like I said, we have been talking about online trading and CFD trading. And like with every type of investments, this does carry a great deal of risk. So I do suggest you do your own research and due diligence and know of the risks involved before entering any trade. On that note, is there any questions for me? Anything anybody would like to ask me at all? And like I say, if I know the answer, I'll answer you. Hello, Dennis. Good to see you, my friend. Yes, Dennis. There is, all the webinars are always recorded. Okay. So you will receive the recording. I will make sure you receive it. I'll send it myself. So yes, you can watch the whole webinar again whenever you want. It's a recording, so I will send it. So all webinars are recording, so no problem at all. You can watch it again. I'll get that to you, Dennis. Good to see you, by the way. Is there any other questions? My pleasure, Dennis. Anytime. Anytime. Thank you. Cheers. Any questions? Anything else? Is there material you recommend reading or looking up outside of webinars? This is a good question, Matt. Thank you. Look, there's obviously a lot of educational material out there. There's none in particular. I can't say recommend or suggest one book. For example, read this and you will know the Holy Grail, and everything like that. Oh, you're stuck at the conscious and competence. Well, look, Matt, not being funny, actually. If you admit that you're stuck at conscious competence level, that's brilliant, because you've actually identified that you're at that stage. And as they all say, halfway of solving a problem is identifying that you got it. So that's good. But like I was saying, Matt, what I would probably say is, regarding reading material, obviously I can't suggest one thing in particular, one book or one area of expertise to read, because that would be advice. And in my personal opinion, it's like back down to the educational stuff. I don't think there is any experts in this field. All I think is you can gain knowledge and understanding by obviously listening to educators and webinars and taking it from their experience and learning it yourself, because everybody's individual and different. There's a lot of books I've read when I was starting out, and to be fair, I read a lot of books about I never read books that said, how to become a successful Forex trader and that, because I used to read books written by traders on their experiences, things like The Big Short and things like that, proper stockbrokers and their experiences, their highs and lows, and, getting, their understanding. And then I used to study, and understand realistically what, first of all, Forex actually is, because surprisingly, so many people don't actually know what Forex is. They go straight away. So many stuff they go on to technicals and this, looking for the secret answer. They don't take the time out to understand what a pip is, leverage, how that's calculated, things like that. So, like I say, there is educational stuff I will be producing. Again, I'm not saying it's going to give you all the answers, but I'm hoping you will take away from it a good understanding, which will help you find your way out of the conscious competence. What I would suggest as an idea, first things first, is really try really trying to maybe work on a trader's diary. Okay, a trader's diary is where you log down all your trades, and you log down your trades, the date you've done it, the instrument you traded, the direction you went, the entry level, the stop loss, the take profit, and the reasons why, such as, why I did it Fenerbahce, I did it because this, and the outcome. And the idea is you fill in all those boxes first, taking the passion out of the way, so that you are thinking more calmer and patient, and that's a good way of establishing a plan. Jimmy, thank you. Yes, thank you so much. It was a good start. Thank you. Hope you enjoyed the event to start, despite me doing Darth Vader. I know. I promise you one thing. Good comment. Thank you. I know. The mic is temporary. We'll be getting a brand new mic and a brand new setup actually for the studio. And this is why it's a little bit echoey still, because we still haven't filled out the studio. So that might sound a little bit Darth Vader-ish. I do apologize. But I hope definitely you found it insightful and enjoyable, and it wasn't too put off thinking you had a stalker calling you up. It will indeed, Matt. The thing is, at the end of the day, Matt, what you got to do is you got to understand a little bit about yourself as well. And understand your attitude to risk, because like everything, everybody's different. Some people are more emotional, some people are more methodical, but like I say, I'm not here to give you the secret answer. I'm here to help you try and get some understanding and education so you'll find what works for you. But yeah, take your time, steady, and make sure you understand the basics, understand what's going on and how it works. But certainly, I mean, look, I think what would be a good idea, actually, Matt, and I see if you like this, because you're asking a lot of good questions, and your interaction is great. Maybe we'll do a webinar event where we can maybe all share all our experiences together, and we can all talk about it and talk it through. So I think if you like that, I think we certainly will look at doing that. That'd be really good. Okay, thank you, Jimmy. As long as it was okay, it wasn't too overbearing. But like I say, guys, if there are any questions, any direct stuff you want, you have my email address. I'll quickly show you again. Or indeed, like I say, you can contact me on my Twitter handle. Direct message me if you want. Oh, there it goes. There I am. Here I am. That's my email address, and there's my Twitter. So please feel free to let me know and get, email me your questions, or like I say, direct message me on Twitter or follow me on Twitter. I sometimes give you heads up on what I think is going on in a comic fashion, any way I can do, things like that. Is there any other questions at all? Anything else I can help you with? No? Okay. Guys, just so you know, I know you guys all got account managers downstairs. I do once a week coming up. I will do a personal one-on-one phone call with anybody who wants to request a little bit of one-on-one time. If you want a little private chat over the phone, just you and me, to discuss a few bits and pieces, please talk to your account manager and we'll set that up. So that's not a problem. So I'm here to answer a question directly, and hopefully, Jimmy, not breathe down your ear too much. So yeah, good. Is there any other questions? Anything else anybody else like to ask me at all? But everybody enjoyed it. It wasn't too much. You're not too sick of my voice already yet? No? Thank you. Brilliant. Excellent. Thank you, Matt. I appreciate that. And thank you, Jimmy. Right, guys, if there's no other questions, can I just say big thanks to everybody who attended today. Can I basically do a bit of handout, a shout out in particular to everybody who asked questions and tried. Dinny, I hope the sound got better. Dennis, I will send you that recording, and great to see you again. Jimmy, I hope you still enjoyed it and found it useful, and my Darth Vader impression wasn't too off-putting. And Matt, fantastic questions. Love the interaction, mate. Please don't hesitate to contact me, and let's talk one-on-one some stage in the future. Until then, next time, let's all have a great evening. Okay, let me do the sign off again. Can I wish every single one of you a great evening, a great afternoon, a great morning, depending where you are around the world. Look forward to seeing you next time, or even indeed having a private chat. Like I say, you're like, oh, Dini, it's great. You like your account manager. Good, because our account managers are excellent. I'm glad you like them. And you lost my friend. You too, mate. You take care. But like I say, a big special thanks to everybody. Good night, good evening, or morning, depending where you are around the world. Look forward to the next webinar. Till then, can I wish every single one of you a cracking day, and all of you trade safe.